Hello and welcome. You're watching Market Cafe with me, Ankita Saxena, and with me is Snehi Shah. It's a new day of trades. Well, this is the show where we get you a roundup of how the global markets moved and how the markets will move in India. But before that, let's quickly take account of how the global markets moved. Snehi, we did see some buying coming in yesterday after days of sell-off. We saw Dow was up 400 points yesterday.
Absolutely, Ankita. Good morning to you and wishing a very good morning to all our viewers as well. Let me take you through what the US market did first then, and stock futures were roughly flat on Monday night, and futures tied to the Dow, S&P and Nasdaq oscillated near the flat line. On the other hand, the regular trading session was full of action though, and during Monday's regular session, the 30 stock Dow surged more than 400 points like Ankita mentioned, or nearly 1.2% for its best day since the 15th of June. The Nasdaq composite added 0.6%, and the S&P 500 also closed higher by almost 1%. Now the tech-heavy Nasdaq and the broad market index broke 4 straight sessions of losses. The corporate earnings session also has been great so far, and it's been better than expected for the US because roughly 85% of the S&P 500 stocks have reported quarterly results, and nearly 80% of them have beaten Wall Street's expectations. This is data coming from FactSet. So all in all, a good set of indices coming in from the US markets. Let's shift focus to Europe then, and European stock markets closed slightly higher on Monday as the last of the earnings season results rolled in with 2 key inflation prints ahead. Consumer price index releases are due from China on Wednesday and the United States on Thursday, and the regional stock 600 index ended up nominally with sectors and major bosses pointing in the opposite direction though. Healthcare stocks advanced 0.6% as mining stocks led the losses down 1%. So mixed handover coming in from Europe, but a largely positive handover coming in from the US, Ankita.
Alright, Snehi, and we do see the oil prices cooling off as well after the rally. I mean, we do see the rally take a breather after we saw the big rally that came in the oil prices. Now, oils have eased from the 4th-month highs as crude summer rally is taking a breather. Now, despite those losses, though, WTI is up 1% for the month of August, on pace for its 3rd straight monthly gain. In July, it rallied more than 15%. Now, earlier in the session, crude rose following an attack on the key Russian oil export hub and extended the production cuts by the OPEC kingpin Saudi Arabia and Russia, of course. Currently, the Brent crude is trading at $85.54 a barrel, and WTI is at $82.17 a barrel. So that's where the crude is at.
Absolutely, and with that, let's also look at all the cues that you should be keeping on your radar, domestic as well as globally, and you will have the EIA short-term energy outlook coming in today. So keep an eye out for that. On the global earnings front, you have SoftBank, Foxconn and Bayer that will report their quarterly numbers. When we look at our markets on the earnings calendar of the Nifty companies today, you have 3 companies declaring their results today. Hindalco, Coal India as well as Adani Ports will be declaring results today. Grasim and Hero Motor Corp will be declaring their numbers on 10th August, and Apollo Hospitals and ONGC will be declaring their numbers on 11th August. On the corporate action front, then Maruti Suzuki will be in focus because of its mode of acquisition of Suzuki Motors. Followed by that, you will also have Tailbros Auto. They will be in focus because the board will consider subdivision of existing shares. Piramal Pharma, the right issue will open today. So I'll keep all these stocks on your radar today. Followed by that, you also have Ashiana Housing. The buyback issue will be closing today. The tender offer will be closing. So also keep an eye out on this stock. And on the action of the primary markets, then let's look at the IPO action happening. And today is the last day to subscribe to the Concord Biotech IPO. So if you want to do so, do it quickly. So these are all the cues that you should be keeping on your radar today as well as for this trading week.
Alright, then moving on to some other global news that made headlines overnight. US banks that had their debt ratings outlook cut by Moody's. According to Moody's, the US banking sector is facing several sources of strain, which includes funding pressures, regulatory capital weaknesses, and rising risks associated with commercial real estate exposures.
And JP Morgan Chase has recently announced that they are no longer expecting a recession in the US. The bank has gone ahead and raised their economic forecast as the economy expands at what they say is a healthy pace. The firm has increased its current quarter real annualized GDP growth estimate to 2.5% from 0.5%. Now, the growth is contributed to AI growth and improvement in the labour market. What does this report mean, and does it mean that slowed growth will still continue? We spoke with Arnav Das, who's the global market strategist at EMEA Invesco on the same. So listen into what he had to say.
Invesco have been, for many of us, for quite some time, more in a kind of softish or bumpy landing, kind of camp rather than the recession camp. I think a lot of people are sort of, it looks like, throwing in the towel on the recession forecasts and expecting, a reasonable growth rate. Mainly, I think, because the economy has been so resilient in the U.S. and indeed in many other countries, right? And I think the economy has been very resilient because people have really been experiencing very high employment, right? Even if inflation had been very high and real incomes, real wages had been falling for some time, at least they were still very heavily employed. And throughout the Western world, including especially in the U.S., you have a very tight labor market. So people have jobs, people have income, and people are spending that income, and that income has been rising, although slower than inflation for some time. In the US now, it's rising a bit faster than inflation as inflation falls. I think it's also a very different kind of economic growth story than the conventional cycle.
And shifting focus now, Tesla CFO Zachary Kirkhorn has stepped down after 13 years with the company. He will be replaced by Vaibhav Taneja, an insider who also serves as the chief accounting officer. Shares of the automaker dipped nearly 3% after the news, but recovered to close down a little less than 1% on the day.
And payments giant PayPal announced the launch of its US dollar stablecoin, the first major financial technology firm to embrace digital currencies for payments and transfers. The announcement lifted its shares nearly 2%, which in a way reflects a show of confidence in the troubled cryptocurrency industry over the last 12 months.
And shifting focus then, some good news for Apple fans as your wait for the latest iPhone 15 series may get over soon. According to the Bloomberg, the Apple iPhone 15 series event is to take place in September 13th of this year. This also falls in line with Apple's iPhone launch event timeline that it has followed over the years.
And Finance Minister Nirmala Sitharaman blamed rains, seasonal factors and whitefly disease for the flare-up in tomato prices. She said the government has undertaken steps to stem inflationary pressure in essential commodities. Meanwhile, MOS Finance Pankaj Chaudhary threw light on India's debt picture and important divestment updates. Prakash Priyadarshi is joining in with the details. Prakash, take it away.
So the Finance Minister, in a written reply to the Parliament, has informed that the recent increase in the price of tomato is due to cost seasonality, factors such as whitefly disease, instant monsoon rains and disruption in logistics are the prime reason behind rise of prices. When it comes to the issue that is with regard to high prices of tuar or arhar, Finance Minister has informed that the prices of tuar or arhar have increased primarily because of lower production despite higher imports. Moving ahead, when it comes to the issue that is with regard to government's overall debt position, in a reply to a separate question, MOS Finance Pankaj Chaudhary has informed Parliament that the government's debt was rupees 58.6 lakh crore as on financial year 2014, which increased to rupees 155.6 lakh crore as on March 2023. And that is primarily on back of increased nominal GDP growth. As per the information that has been given by the MOS Finance, India's nominal GDP has increased from rupees 112 lakh crore in financial year 2014 to rupees 272 lakh crore during financial year 2023. Therefore, a risk profile of central government's debt is safe and prudent. Apart from that, when it comes to the issue that is with regard to carbon tax, a separate question that was asked to the government, in a reply to that, MOS Finance has said that there is no such proposal to impose carbon tax during current financial year. Moving ahead, a separate question that was asked about current disinvestment status of HLL Lifecare Limited. MOS Finance Bhagwat Karad has informed Parliament that the government has not stopped disinvestment of HLL Lifecare Limited. In fact, state government's UI bid has been rejected by technical advisor as it did not match eligibility criteria. But the overall disinvestment process of HLL Lifecare Limited is going as per the plan.
And well, moving on then, Indian auto market is seeing an entry of around a dozen of new SUVs, including the refreshed variants. Now, with the onslaught of these SUVs, sedans are finding it less buyers, and as a result now, sedan makers are planning to give huge discounts on 3-box cars to make them more appealing for the buyers. Now, there is a special report by Sumit Chaturvedi. Let's take a look.
It's raining SUVs this monsoon. Companies are launching new SUV models every week and buyers are lapping them up. Entrants like Honda coming for the first time with an all-new Elevate compact SUV to the already launched ones, like the updated Kia Seltos. Automakers are leaving no stone unturned to attract buyers, and buyers are also willing to wait up to 2 years to buy their favorite set of wheels. But with the sports utility vehicle making majority of new four-wheeler sales, sedans are suffering. The sedan models were once the favorite of the market but are struggling now. Automakers are planning to now sell them at high discounts to attract buyers to the segment. Dealer sources say discounts on these cars can go as high as 50,000 rupees per car from around 25 to 30,000 per car, including schemes. This means some dealerships can double discount to increase sales.
Recently, we have started seeing some launches happening in sedan. I think a better product with a feature-rich vehicle, a sedan vehicle, will definitely give a boost to the market. There is a segment of the customer which is very close to the sedan, and we firmly believe there is a definite customer for that. I think more trendy launches with feature-rich vehicles in this segment will give a boost to the sedan segment.
The sedan market in India is dwindling fast. For Maruti Suzuki, the sedan sales are less than 1% of overall sales. The company sold 1,340 units of Ciaz sedan in July this year compared to 1,379 units sold last year. Though sedans are a dying breed in India, some companies are giving generational or midlife updates. Honda still relies on its city model for a bulk of its sales. There are just 7 sedan models available currently, while there are over 46 vehicles in the SUV category. A bulk of the sedans being sold are in the entry-level category, though even this segment is seeing fall in sales.
All right, lots of discounts and offers to be looked forward to when it comes to the auto market. But with that, let's quickly slip into a very short break. On the other side, we'll see what the Asian markets have been doing this morning. Hi there, welcome back and thanks for staying tuned to Market Cafe. This is ET Now. Let's get a move on then. And Indian companies have raised almost 10 lakh crore rupees in FY23 from the markets. This is what the Sebi data is showing. The regulator proposes to review eligibility criteria for introduction and continuation of stocks in the F&O space. My colleague Ankur Mishra is here with more on this. Ankur, what are you picking up?
Yes, Sebi annual report has highlighted various policy changes, and one of them is, of course, the F&O eligibility review. Now, in this, the market regulator has proposed to review eligibility criteria for introduction as well as continuation of stocks in F&O. Right now, what happens is there have been certain complaints which have said that the eligibility criteria is not proper In fact, many of the listed companies have said that they are not included in F&O despite the criteria being fulfilled. So there is going to be a review in this process. And if you recall, the last review of like this was happened in 2018. Apart from that, there has also been suggestions on disclosure from unlisted companies. And this has been done to review and standardize the disclosures in public offer documents, and that is issued by private and listed companies. Apart from that, the data has also been mentioned about the higher capital raising in FY23, which has been to 9.8 lakh crore, and higher. This is higher than 4.6% if you compare with last year. Apart from that, there has also been suggestion to implement mutual fund light regulation. Now, this is something which ET Now had earlier reported in May about these regulations, and this will reduce compliance burden as well as it will foster innovation for mutual funds.
All right, moving on then. ET Now's news break has been confirmed. Qatar Investment Authority has bought 42.6 million Adani Green shares. Now, Infinite Trade and Investment, a founder group company of Adani Green, sold 44.9 million shares on BSE at 920.43 rupees each.
Absolutely, that's an ET Now news break confirmed coming in. But also the new age tech space is looking like a very hot space right now, because Paytm founder ups his stake in the company, Zomato continues the upward journey, while Meesho turns profitable and eyes IPO in the years to come. Sharad is here to bring us a roundup of all the action from the new age tech stocks. Let's go across and listen in.
Well, yes, in focus we are having the new age tech stocks, be the listed or the unlisted space, and the entire focus has been on cost reduction and focusing on unit economics as well as maximizing their overall margin and the PAT profile. Now, important announcement coming in, Paytm achieved their operating profitability guidance 3 quarters before what their guidance was, and this was achieved in the third quarter of FY23. While recently Zomato also turned profitable for the first time since listing for the first quarter of FY24. Apart from Paytm and Zomato, we also have Nykaa, which the company itself has been profitable since its listing days. But there are 2 companies, especially in the listed space, which is PB Fintech and Delivery, which are still under their progress for their path to profitability. Apart from this, Meesho, which is expected to come in for the IPO for the next 12 to 8 months, they also delivered in a statement that for the month of July itself, they have turned PAT positive. So a slew of important announcements coming in, where unicorns and large tech companies which are listed are showing their path to profitability. Now, of course, the important reason is the cost-cutting measures are being undertaken, and a lot of acquisitions are also being written off as well. Apart from this, going into the details, do remember Paytm's EBITDA before the ESOP adjustment has been positive for the last 3 quarters, and also Nykaa is expecting that the costs, they're expected to come down by 10% going forward. But there are 2 companies which are having the status in the progress, and I'd like to point out Policy Bazaar, we are expecting at least 2 to 3 years, then the profitability will hit the company. And lastly, Delivery, recently they came out with their numbers as well. The numbers were largely in line with what the street was expecting, and they expect that they aim to be profitable in the next few quarters. However, if you look at their express business, they are already profitable in that segment.
And well, speaking of new age tech stocks, Zomato may also soon start charging platform fees of rupees 2 per order in certain markets for select users. Now, following Swiggy's suit, now what is the platform fee going to be, and how is it really going to affect the company and its users? My colleague Somit is here with all those details.
Well, the recent news reports are suggesting that Zomato has started charging a platform fee of 2 rupees per order in certain markets for certain users. Now, the company is yet to confirm this news, but an extra charge of 2 rupees per order will definitely be positive. Now, what is a platform fee? Now, it's a flat fee that is charged per order, irrespective of whatever the order amount is. Also, this flat fee is charged to all users, which means members, while non-members also are being charged this amount. Now, 30% of the orders for Zomato come from Zomato Gold members, so this would be charged to Gold members as well going forward if it is implemented on pan-India basis. Now, what will be the impact of this? Now, do remember that Swiggy has already started charging a platform fee from April 2023. So there won't be any loss to competitor, which means that Zomato's market share loss risk are mitigated given the fact that the competition has also already started charging a platform fee. Moreover, the platform fee of 2 rupees per order is very nominal and may often be overlooked along with other charges by users. That is what the street is expecting. And also, if you see, the platform fee would directly flow down to its EBITDA and the bottom line, which would without any material cost implication. Now, if you see in the first quarter, Zomato's food delivery contribution per order stood at close to 26 rupees per order, which would have been increased to around 28 rupees per order if such a charge would have been already started by Zomato, and the additional fee could boost the company's food delivery adjusted EBITDA by around 40 crore rupees per quarter, which means that annually the amount would be close to 150 to 160 crore rupees, which is nearly 38% of its FY24 estimated consolidated adjusted EBITDA as per Morgan Stanley, which means that if the company starts charging this additional fee, then its EBITDA, consolidated adjusted EBITDA, could be higher by around 38%, which is a good and strong number in itself. Also, if you see, the company had turned profitable from the first quarter, so it would be important to see going forward whether the company starts this charge of 2 rupees platform fee, how soon they start charging this and how profitable this will be for the company going forward.
All right, thanks Amit for all those details on Zomato. But stay with us then, because word is that changes to weightage and float of HDFC Bank and FTSE will be done in 3 tranches now that the merger has happened. So Amit, tell us what this would mean and how this will impact the stock.
Well, if you see the much awaited announcement from FTSE on how it will treat the increase in free float of HDFC Bank to the merger is out. Now, the index provider FTSE in a notification has decided that the implementation of the revised shares and free float post the merger of HDFC and HDFC Bank will be implemented over 3 tranches starting September 2023. That is the semi-annual review. The other 2 tranches will be in December 2023 and the last one will be in March 2024. Now, this changes has been done as HDFC Bank meets the foreign headroom requirement of at least 10%. Now, this announcement clears the uncertainty that was prevailing regarding the weightage when it comes to HDFC Bank and the FTSE indices. Now, from September 2023, HDFC Bank weightages will increase across all indices of FTSE, and this could lead to an inflow in the range of around 500 to 550 million US dollars as per multiple brokerages. Now, Nuvama in its earlier note had clearly mentioned that the total amount of inflow because of increase in weightage of HDFC Bank post the merger could be to the tune of around 1.5 billion US dollars, and in the first tranche now brokerages are expecting the inflow could be anywhere between 500 to 550 million US dollars. Now, the September review changes will be announced on August 18th and the adjustment regarding the same will take place on September 15th. So do keep an eye out for HDFC Bank.
Well, all right then. Thank you so much for all those details, Somit. We'll move on then. Oil marketing PSUs will soon get 30,000 crore rupees financial support. Now, ET Now has learned from sources that Finance Ministry is evaluating the proposal as announced in the budget for green projects. My colleague Prakash Priyadarshi has more details on this.
The oil marketing companies will soon get rupees 30,000 crore as financial support from the government. Sources are informing that the Oil Ministry has prepared cabinet note for that, and the Expenditure Finance Committee of the Finance Ministry is evaluating this proposal at this moment. Once cleared by EFC, it will be sent to the PMO, and then after Indian cabinet will be approached for its final approval. As you are aware that the government has announced rupees 30,000 crore as financial support to the oil marketing companies in the budget for their green transition projects. But the government is not in favor of providing this amount in a way of subsidy. In fact, government is seeking equity in PSU oil marketing companies in return for funding. Therefore, while Ministry has instructed IOC and BPCL to come out with a right issue, and HPCL will make a preferential share allotment. We are also given to understand that government may provide rupees 30,000 crore by October this year. It will help oil marketing companies to cover their previous losses due to halt in retail prices, but the oil marketing companies are reiterating that their accumulated losses are still at rupees 1.7 lakh crore despite quarterly profits.
All right, thanks Prakash for all those details. But with that, let's quickly slip into a very short break. On the other side, we'll be looking at all the stocks that you can track in today's trading session.
Welcome back. You're watching Market Cafe, and it is that time of the show where we get you all the stock-specific news and all the stocks that you need to watch out for in today's trading session. And for that, we have my colleague Lisa in the studio with us. Lisa, tell us what are the stocks that are on your radar and that we need to watch out for.
Right, Ankita. First of all, good morning. So let's start with the stocks that will be in focus today. Starting with Adani Green. Yesterday, we had ET Now had broken the news that Qatar Investments will be buying around 2.7% stake, and that has been confirmed. They have bought the stake for 3,920 crore. Moving on to Inox Wind, the block deal of around 500 crore is likely today, and the deal is at max 5% discount to the current market price, and the promoter entity is the likely seller. Moving on to Paytm, the Paytm payments auditor Price Waterhouse has resigned, and they have said that it has not raised any concern and there will not be any major impact. Moving on to the non-life insurance sector, they have come out with their July data. Star Health premium is up 16.8% on year-on-year basis. New India Assurance premium growth that was up around 8.9%, as well as ICICI Lombard premiums growth that came to around 21.9% on year-on-year basis. Meanwhile, Railtel Corporation, they have received an order from Pimpri Smart City Limited, and the estimated annual revenue for this is around 70 orders for 70 orders per contract, and the total revenue for 10 years that comes to around 700 crore. Moving on to some earnings, PB Fintech has reported their earnings. Revenue came to around revenue stood at around 666 crore, and it was up 31% on year-on-year basis. Meanwhile, the loss that has narrowed down to 11.9 crore versus a loss of around 204 crore which was seen last year. And Tata Chemical has also reported their earnings. Numbers were largely in line. The revenue was up 5.6% on year-on-year basis, stood at 4,218 crore, while the net profit that was down 10% on year-on-year basis stood at 532 crore. So these are the stocks that investors have to keep on their radar for today.
Absolutely, Lisa. Thanks for that list and thanks for taking us through that. But I believe you also have brokerage notes coming in from JP Morgan, Morgan Stanley, as well as Goldman Sachs. So tell us what stocks they're keeping on their radar this morning then.
Right, let's go through it one by one. So starting with the Godrej Consumer, JP Morgan has maintained an overweight on the stock. They have hiked the target price slightly to 1,135 from 1,075 earlier. The GOM region, that is the Africa, US as well as the Middle East region, they said that the currency devaluation that will be weighing on the profit as well as the growth in FY24. And on their recently acquired Raymond Consumer Care business also, they said that the synergy overhaul that is underway and the synergy benefits that is likely to flow in the second half. Moving on to Goldman Sachs, when they came out with a report on Godrej Consumer, they have maintained a buy with a target price of 1,200, saying that Godrej turnaround story that continues and it remains the top pick within their consumer staples coverage. Meanwhile, Morgan Stanley has also come out with a report on PB Fintech. They have maintained an overweight on the stock with a target price of 810 per share. They said that despite the Q1 seasonality, the growth was driven by strong core business and the contribution margin as well as the adjusted EBITDA margin that improved to the best levels ever. And lastly, Morgan Stanley has come out with a report on Zomato, which will be in focus. They have maintained an overweight with a target price of 115 per share. They said that charging a platform fee, if true, has come in ahead of the expectations, and the move should have positive implications on their unit economics. So these are the stocks that are on brokerage radar and that you have to keep an eye on today.
All right, Lisa, thank you so much for all the stocks. We will be keeping all of them on our radar. We'll move on then. India versus China is the key theme to watch out for. Now, we caught up with Jonathan Garner, Chief Asia EM Equity Strategist of Morgan Stanley, on his views. Listen in to what he had to say.
I think valuations have cheapened up for India since last October in relative terms quite considerably, as other markets in North Asia like Taiwan and Korea have outperformed the Indian market quite substantially. So there's better relative valuations than there were. But if we zoom out, really the medium-term story is what excites us so much about India. We're starting to see a trend of superior US dollar earnings per share growth over the cycle versus other emerging markets, and particularly versus China. And we're also seeing the currency, the Indian rupee, sustaining a real exchange rate trend that is stable to positive at a time that the Chinese renminbi, for example, has become really quite weak. So what we're seeing is portfolio investment is actually moving towards India at the moment. And that means that though the multiple in absolute terms, to answer your original question, about 20 times 1 year forward PE, may look high compared to emerging markets on about 12 times, this superior compound earnings per share growth and portfolio equity inflows likely keeps the market very well supported.
If one looks at the global scenario, 2022, we saw mass outflows out of India to China. When we started the year, that pattern was at play. But since April, foreign institutional investors have come back into India, both by the portfolio route and by the FDI route. Do you think this could be a multi-year trend in making, and now we should get accustomed to strong flows by institutional investors, especially foreign institutional investors, into Indian equities?
Yes, we do. What we now know is that the economic recovery in China has been very lackluster. And certainly there is a debate amongst investors as to whether it's reached an important multi-decade transition. Its demography is quite adverse, and that's in contrast with India in terms of the population age distribution. And that matters not just for themes like consumer, industrials, financial stocks, earnings, but it matters for the demographic that can now buy equities in India. So again, for China, the near-term issue around leverage and the property sector's issues is causing a real challenge for policymakers, and it is weakening the currency. Whereas on my recent trip to India in June, I was very struck just how strong the economy is across the board in manufacturing and services PMIs, in real estate transaction volumes and activity, in inward FDI and infrastructure construction. It's a very interesting story to us in India.
Jonathan, your report explicitly talks about where China was in the past, India will be in the future. Now, that's a very powerful comment, and I love when somebody says such good things about India, being an Indian. But can you elaborate more on that?
Well, if we simply look at metrics like GDP per capita, for India, we're standing at around $2,500. China's about $13,000. China's growth model is running into trouble. India's has a long way to run. If you look at leverage, household leverage overall in the economy in terms of debt ratios to GDP, they're still extremely low, a feature that is shared with Indonesia, for example, but it's in stark contrast to the situation in China or North Asia more generally. And again, we know that in this multipolar world dynamic that is ongoing, India has significant optionality there in terms of the way that firms from the United States, Japan, Taiwan, elsewhere are relocating at scale their production platforms into India. So there is an awful lot of room to run here in India's growth model. We're very excited about it.
Do you think that in this transition, as money migrates from India to China, we could be looking at serious changes in terms of capital allocation? We could be seeing serious changes in terms of MSCI allocation, because if I look at the MSCI emerging market allocation, China still has the largest weightage and largest component.
Yes, I think you may have misspoke there in your question. We're actually seeing that fund money is moving from China towards India, not away from India towards China. And we think that move towards India has considerably further to go. What we're starting to see is the development of the emerging markets ex-China product. India is a very large weighting within that index. And so when we look at portfolio flows generally, we are seeing that structural change that's underway. It's also ongoing into markets in ASEAN, like Indonesia and Singapore as well. But India is set to benefit significantly.
All right, that's the word coming in from Jonathan Garner. Let's get a move on then. And competitive intensity is expected to remain high for the SUV segment, according to Rajesh Jejurikar, ED and CEO of M&M. Listen in to what else he had to say about M&M's tractor business, which is likely to see low single-digit growth. According to him, listen in to what he had to say.
In this crowded market, we've taken a very conscious call over the last 3 years in particular on the kind of SUVs we want to make. So, when you think about it, you may say that, if you're going to have a strategy which is very niche and you're going to have a highly differentiated, authentic SUV strategy, you actually can't get volume. last 4 quarters, continuously we've been number 2 by volume, over and above being number 1 by revenue market share. So even with our currently focused, differentiated, authentic SUV strategy, we are able to sell volumes and be at number 2 level in a market which, like you said, there are 40 brands. So I think pricing power will be around how much differentiation you try to bring in. And if you have a differentiated portfolio, customers will want to buy you. Certainly, we would expect high level of competitive intensity, and which is all the more reason our strategy is going to be about driving high level of differentiation, have a very differentiated portfolio, and do products which we believe go well with our brand DNA and which also appeal to the Indian consumer. So it's not like, okay, it's working in some other part of the world, so let's do that here because that's the platform we have or that's the product offering we have around the world. Tractor industry comes off a very high base of F23. We think that will be low single digit growth. Many positive enabling factors in the rural market. The rains coming in July, even though little delayed, has not affected sowing. So Kharif sowing is good. The Rabi crop last time was good. We expect government spending in rural to go up as we move into multiple elections, state and then national over a period of time. So several enabling factors. But right now we are not changing from low single digit for the industry because we would rather wait and watch, and we know that the tractor industry is on a high base. We've been gaining market share. We gained again YTD July about 0.5% on top of a very good growth last year. We see further upsides because there's a segment of the market, the orchard and the lightweight tractors, where we have a lower presence than our national market share. We've just launched Swaraj Target, a new product there, and we're going to launch the Mahindra Oja on 15th August. So we have 2 big launches happening in a segment in which our market share is 30% compared to the our national average of 42%.
And well, moving on then, after 8 hours of deliberation, the Rajya Sabha passes the Delhi Services Bill with 131 members voting in favour. The bill gives the central government authority over bureaucrats in the national capital. And the opposition no confidence motion against the Narendra Modi government will come up in the parliament today. It is brought by the opposition party citing the recent spate of violence in Manipur. It is expected that freshly reinstated MP Rahul Gandhi will open the debate.
Keeping it with politics then, Congress leader Rahul Gandhi has been reinstated as Wayanad MP in Parliament after 4 months. This after top court stayed his conviction in the defamation case over Modi's surname remark. After reinstatement, Rahul Gandhi also took part in the Lok Sabha session. And Paramount Global reached an agreement to sell book publisher Simon & Schuster to a private equity firm KKR for $1.62 billion. The media company announced the deal after it reported second quarter earnings on Monday. Paramount's overall revenue fell 2% to $7.6 billion, while the TV segment was dragged down by lower advertising revenue.
Alright, we are completely out of time on this edition of Market Cafe. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. The market will take the action forward.